And inflation expectations can only be managed if people really believe that inflation is going to come down to whatever the bank is, that the central bank is targeting. And what is currently happening is that people are gradually changing their minds and starting to believe that inflation is becoming more sticky.
Consumer inflation is now near 6%, which is above the midpoint target set by the South African Reserve Bank of 4.5%. What does this mean for ordinary South Africans as well as ordinary businesses when it comes to their wallet? Here to unpack this and more is Chief Economist at Efficient Group, Dawie Roodt. Dawie, I had a lot of high expectations for 2022. However, we're starting to see some indicators that things may not point to the direction that I was hoping for. Quite recent is that we have inflation numbers, which are about 5.9%, which are high inflation numbers, putting upward pressure on inflation, as well as now proposed increases in electricity prices, as well as fuel prices. What does this mean, Dawie, for the average South African as well as the average business?
Hi, Bheki, very nice as always to talk to you. Well, yeah, you're right. We've got inflation in South Africa now close to 6%. It came in as a bit of a shocker. That is after November's 5.5%. So it's quite a significant increase. And there are many reasons why it increased. It increased because of things like, for example, energy prices, the increase in the fuel price and all that. But really, that doesn't matter, because the definition for inflation is that things are getting more expensive. But another definition for inflation is that your currency is losing its value, which comes down to the same sort of thing. So the point is that the currency is losing its value and we're getting rising inflation. Now, inflation is a bad thing, and inflation is a bad thing for many, many reasons. But I would guess that the most important reason why inflation is a bad thing is because there are many reasons, but from a fundamental point of view is that it distorts prices. Prices are extremely important in a proper functioning economy, but in an inflationary environment, you can't really see prices. And if you can't really see prices, then the allocation process of resources in the economy is distorted and it becomes not optimal. So that is why inflation really is bad. Inflation is bad for other reasons as well. Inflation is bad because it erodes the value of money, for example. So people don't want to save money because money loses its value, for example. Inflation is also bad because it's especially bad for wage earners. They can't hedge themselves against inflation, while rich people typically can hedge themselves against inflation much, much easier. And the list goes on and the list goes on. So I'm afraid that inflation, and that has been from about the middle of last year, that has been the hot topic amongst economists, and not only in South Africa, worldwide actually. And the debate is whether inflation that we're currently seeing, whether that is temporary or more of a permanent nature. And I'm afraid initially I thought it's only temporary, but I have to admit that gradually I think I'm getting convinced that the current inflation pressures that we are experiencing are more of a permanent nature. And that creates a huge problem for central banks. And again, not only in South Africa, but worldwide as well, because central banks, they have to address inflation, and you can do that mechanically, but they also have to address inflation expectations. And that's the difficult part, actually. And inflation expectations can only be managed if people really believe that inflation is going to come down to whatever the bank is, that the central bank is targeting. And what is currently happening is that people are gradually changing their minds and starting to believe that inflation is becoming more sticky and more of a permanent nature, including economists as well. And that is really creating the problem. But as you've said, inflation 5.9%, it is the highest for quite a number of years now in South Africa. And inevitably, that means that the Reserve Bank will have to act.
Enjoying this analysis? Click here to sign up for our 30-day free trial for more content from the CIA.
That is indeed quite concerning there, Dawie. And even the Fed chair in the US stated that they expect that price levels will remain at elevated levels, and hinted on tapering as well as an possible increase in interest rates in the US, which we discussed the implications for the South African rand in our previous video, which CRA channel viewers can have a look at. Now, the other important point with inflation is that it erodes savings of many savers in the country, and especially when interest rates are so low. In regards to interest rate, the South African Reserve Bank is probably looking at this with a close eye, as well as fuel prices. Do you likely see interest rates in the country increasing?
Yeah, the inflation, as we all know, that the inflation band that the Reserve Bank is targeting is 3 to 6%, which means 4.5% is more or less the normal. And by the way, the average inflation rate for 2021 was 4.5%. So the Reserve Bank, I think, did a pretty good job. But Lesetja Kganyago, the governor of the South African Reserve Bank, actually indicated a few months ago that he would like to see a lower inflation target band. In fact, he wants a point target, and I agree with him. I would prefer a point target. I don't like a range, because when you have a 3 to 6% range, for example, then 6 becomes the target. So I prefer a point target, I think he suggested a 4% or a 3% point target. I would go lower. I would go for a 2% point target in line with our most important trading partners. So yes, but unfortunately that means then that the Reserve Bank will have to start increasing interest rates. And I know it's quite painful, and a lot of people will. It's going to be painful for anybody that owes money. I think there will be many people that will be very happy with an increase in interest rates, because especially the elderly, especially people that depend on an interest income on their savings, for example, they've been really having a tough time for many years now, because interest rates have been relatively low. They will be happy, of course, but anybody owing money, they will be on the wrong side of this stick, I'm afraid to say. But that is the only way that the Reserve Bank can address this, and that is by increasing interest rates. And for that reason, I believe that the Reserve Bank at the next Monetary Policy Committee meeting will increase interest rates by another 25 bips or so, bringing it to 4%, the base rate in the economy. But there's something else that's actually more important. And it's not the actual increase in interest rates or the change in monetary policy what's important, it's what they're going to say. That's important. Because Lesetja Kganyago, he needs to prepare the economy, he needs to prepare the market for further rate increases. And that's where the inflation expectations thing, how that is managed. And that is by the governor standing up and saying, listen, I'm going to increase interest rates. I don't have a choice. And watch out, you guys, if inflation does not behave itself, we'll be forced to increase it even more. And I'm serious, and I will bring inflation down and that sort of stuff. So that is how you manage expectations over time. And that's actually more important than whether they are going to increase or not, for that matter. It's what they say. And it's how it's called open mouth policy. So that's the job of the central bank, to open its mouth and to tell everybody and get everybody on board that we have to manage inflation lower and inflation expectations lower as well. Maybe just a comment. You referred to the Fed and Powell. In the United States, what is happening, there's a lot of, what is clear is that wages are going up quite strongly in the US. And I must tell you, if I look at inflation, I am getting more concerned when you start seeing inflation in wages as well, because wage inflation tends to be more sticky than other things. So once you see wages start going up quite strongly, which we are currently seeing in the United States, then it becomes clear that inflation is becoming more entrenched, and South Africa part of the rest of the world economy. That also means that we will be part of this cycle, which means higher inflation at the moment. And maybe on the topic of the United States, also worth to mention that if the US decides to increase interest rates, they're not there yet, but they started with so-called tapering. But there's a very good possibility that they can start increasing rates as soon as March. And if they start increasing interest rates in the US, that will mean that the dollar will go up. And if the dollar goes up, other things goes down. And the things that can potentially go down are things like, for example, commodity prices, but also the South African currency. So that's something that we have to be aware of, and that's something that we have to prepare ourselves for, and that is another reason why the Reserve Bank has to increase interest rates, to make sure that the relative difference between our interest rates and that of the United States remain at a certain margin.
Now, given that interest rates are likely to be hiked in the future, what does this mean for the South African economic outlook?
Well, perhaps just ignore interest rates for a moment and see what economic outlook or economic growth is going to look like in 2022. And 2022 would have been worse than 2021, simply because 2021 was such a good year. 2021, we were waiting for the final numbers, but we're probably going to see economic growth close to 5% in 2021, and that's the so-called base effect. So if 2021 is very high, and that, by the way, is also why 2021 was such a good year, because 2020 was such a bad year. So there's a so-called base effect. And simply because of that, 2022 is likely to be lower and significantly lower. So that's one reason. And then there's a host of, a range of other reasons why the economy just can't grow faster. We just don't have enough electricity. And then on top of all of that, we've got the inflationary pressures building up, forcing the Reserve Bank to increase interest rates, and that will also put a lid on economic growth, at least in the short term. So it will be negative for economic growth and everything that goes with that. So my view is that we can see economic growth in less than 2% for this year. In fact, over time, South Africa's economy seems to be governed at around about 2%. We can't really grow faster sustainably than 2% just because of a lack of electricity. Now, on top of all of that, we've got other issues as well, like I've mentioned, inflation and interest rate going up and things like that at the moment. So no, I'm afraid 2022, with this mixture of variables, is likely to be quite disappointing.
Thank you, Dawie, for your brilliant analysis. We now leave this to you, the viewer. What do you think of the recent consumer inflation numbers as well as the South African economic outlook? To get access to a range of products that we offer at the CRA, please click on the link below to your 30-day free trial. Until next time, take care.